Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 30th, 2019. Uh, Somewhat of a mostly flattish day, but some interesting developments I want to point out that I noticed just watching the intraday charts today. Let's start out with the bigger picture as usual, not the biggest picture. That's still, like I said, weekly charts still indicate more downside in my opinion from here, but I'm still favoring a bounce into the end of this week. And today was, believe me, nothing to get excited about, but it was the first green day for the Qs in over a week. It was Tuesday before last. Last time we had a green candle, and now the story here is, look, we're pinched between support and resistance. 175.66 was the support level we hit yesterday. Undershot it briefly and then closed above it. We came close to the 200-day EMA, but reversed a little shy in QQQ, whereas SPY almost essentially kissed its 200-day exponential moving average. So again, the big story here is that 178 was a pretty significant, important support for the Qs. It was broken, and support once broken becomes resistance. So that's the story. We're sandwiched between a rock and a hard place. Support at 175.66, resistance at 178, and we still have the bullish falling wedge pattern. It'll show better on the 60-minute chart. I'll get to that in a second. RSI divergences. So while again I'm not, my convictions aren't super strong because of all the technical damage that's been done to the long-term charts. A lot of breakdowns lately. However, with that being said, I still maintain I'm still favoring a bounce anywhere from about 3 to 6% bounce from where we're at, the support level here, and then a resumption of the downtrend, at least as of now. So we'll take it one day at a time. First, we even have to, get a tradable bounce to begin with, and then we'll go from there and see if it looks like if we do get one where it's going to run its course and where it's a good time to, reverse back from longs into shorts. All right, so there's the QQQ, and almost a identical story on SPY, sandwich between support and resistance. That 280 level was a very important support level on SPY for several reasons. Capped a lot of the rallies last year, but we most recently, when we pulled back to that support level, we hit it a couple times, reversed just shy there, and then gapped down below it yesterday, and then hit that. As I said, there's that red line's a 200-day exponential moving average. That often produces a reaction on the initial tag when you haven't hit it for a while from above or below. So we bounced so far. Also a green day in SPY, nothing to celebrate, only up 0.28%, about half of what QQQ was up, but so far so good. And what we're not seeing right now, we're not seeing the waterfall type selling that we did back then in the fourth quarter of last year. So far, it's been a relatively orderly correction. That could change on a dime, but all right. So those are the levels to watch on the daily chart, at least for solid close below 277.53. And the 200-day moving average not good, although of course again you have the Qs coming in with their 200-day EMA a little below there, but and then upside you have the 280 level and the potential downtrend line here, but and then the RSI divergence like I mentioned there. Now let's take a look. Let's zoom down to the 60-minute charts, because that's where I'm really focused. Let me really, my focus again lies on the Qs. That's my preferred trading proxy. That's what I'm watching. Tech and the big FANG stocks let us down, as I suspected, and I think the selling for the near term. That's all. You gotta, completely separate near-term and long-term outlooks. At any given point in time, I'm going to be either bearish or bullish on the near term, and then bearish or bullish on the long-term time frames, and one has nothing to do with the other. So let's start out here. Let me show you for those of you that didn't catch the video earlier today. That was for subscribers only. But this was a public post on the front page before the market opened today. And so these are the same targets. I've already shared these in recent videos. These are potential bounce targets right here. At this point in time, well, let's just see what happens. We need to get a breakout. But as I said here, A break above the falling wedge and the intersecting 177.20-ish resistance level is likely to spark a short covering rally in QQQ. So there's your first resistance right there, about 177.20, and there's the downtrend line for this wedge pattern here on the 60-minute chart. Showed comparable levels here to watch. 280 on SPY, again I mentioned 280 being on that daily chart. Key support on the daily chart that was broken, now that's resistance. So you also want to see the SPY pop 280, and then I have a slightly alternative draw here. That's a different, another downtrend line on SPY. But let's get to the charts and let's see what happened from. And remember, those were taken in pre-market. Those charts were reflective of yesterday's close. So here's what happened today. I'll zoom in a little tighter. Let's get that up here. All right, so we popped up. And it was very interesting on the 1 minute chart. We popped up. There's that 177.20-ish level here. Let's just click that line to make it 177.20. And we kissed it on several different, pretty much all day. Look at all these 60-minute candles. Rejection, rejection, rejection. So we couldn't take it out. And as I often say, resistance is resistance until unless taken out. So as I mentioned in the earlier video today, a bullish falling wedge, the only bullish part about a falling wedge, it's a potential bullish reversal pattern, but it comes when you're in a downtrend, and you can continue to work your way down within the wedge. Now the wedges usually break, they don't break right at apex, they usually break about 70 to 80% towards the apex of the wedge, and apex of where the two lines would come together and intersect. That would be the apex of a wedge right here. So we're at that sweet spot now where if it's going to break out, it should break out soon. And so you had dual resistance levels coming into play, and I like to see that when you have not just one but two resistance levels to come together. It increases the odds if you pop those levels together, you're going to bring in the buyers, and you'll also maybe spark a short covering rally. So if you look at the 1 minute chart, very interesting. Here's that line today, that 177.20 level. This is yesterday's close. You're looking at a really zoomed in version here. That's where we closed, right here on that dotted dashed yellow line. So we popped up today, and look at that. 1, 2, 3 strikes, you're out. On the third failure, and this is just me tape reading, I think the shorts stepped in. They realized, those that for whatever reason are wanting to short now. They didn't want to short 8% ago, but they're wanting to short QQQ now. So you saw some selling there, and then we pushed down. We continued to go down, but what happened towards the end of the day, we ramped that back up. So pretty much anybody, and again, it's just intraday stuff, and maybe the day traders all closed out their positions. Who knows? I'm generally speaking, but we're back up there. And I did a video earlier today after we had that rejection there, pointed it out that was, there's maybe longs that give up when they see this resistance can't be popped. And again, shorts will come in. They become emboldened when they see a resistance level that security fails to take out. And so I said that I favored, although we were rejected there, I favored another move up today. And I still do. And to come back up here, I think if we get back up there again, at that point, we'll pop it. We already tested 3 times. We already rejected. So anybody that shorted throughout the day here, they pretty much got put underwater, at least back to break even at the close. Remember, the markets are closed now. However, futures will trade around the clock. So what I had said in the trading room, this is when we were starting to move up off the lows, but not there yet. I said my guess today is that they park it right up on here at resistance, keep everybody guessing, and then tomorrow we gap up above the wedge, and it does one of two things. It traps shorts, and they start to get squeezed out, because if you did short today on the pushback or any of the pushbacks to 177.20, this is TA 101. You short resistance, you short here, you see the failure with a stop not too far above that resistance level. But it would be nice to see a gap, because it would inflict a lot of pain onto the shorts. And guys, I don't mean that personally. If you're shorted or you short, I'm just talking how the dynamics of trading work in investing. And if you gap up, it also denies longs. Let's say there's a lot of longs waiting for that buy signal, but they want to see a breakout. And so if you gap up tomorrow, it could lead to some chasing. It could lead to those shorts that are now feeling even more pain. Maybe they get hit with margin calls, they cover. So hey, first things first, we are in a relentless downtrend. I said earlier today also in the trading room, feels like this market has a not a wet blanket on it, but like a dripping wet comforter, something very thick and heavy. Every little bounce that we can get here is being sold into, and we're failing at all these resistance levels. The sellers are stepping in. But the thing is, that happens till it doesn't happen anymore. That's what trends are all about. Just like it looked at the market would never go down just a month ago today, when every dip was being bought and it kept going higher, all of a sudden that stops. And it's usually technically triggered. That one certainly was. That top was well announced. The break in tech gave us the sell signal, the breakdown in QQQ, and so there it is. Again, with the long-term charts, a lot of damage done lately. I wish I could say it with the highest conviction, but I'm still leaning that way, as I have been for the last couple of days, for a bounce up here, and I think it'll happen that way. I think futures will move up overnight. If they do, get that gap up, and then that would be your buy signal. Now anything can happen, and that's what we'll have to watch for. Let's say this thing does break out, assuming that it does. Will that breakout get sold into and then usher in another big wave of selling? If so, that's pretty darn bearish. It just tells me that there are no buyers left in this market, that everybody wants out. And again, I'm generally speaking, of course, but that would be pretty bullish. Otherwise, let's just take this pattern for what it is, a nice clean falling wedge. Still 60-minute divergences, hasn't triggered a buy signal yet, and it may not. But as of now, the divergences continue to not only are they intact, they continue to they continue to build, and so that's what we could be looking at tomorrow. Let's see, what's tomorrow? Friday, last day of the week. So there are going to be a lot of, well, again, it's a matter of, are there more shorts right now in the market, more nervous shorts or nervous longs if we do rally, because then they'll have to decide how they're going to position over the weekend. Nervous shorts, if we get a rally, might cover, and so I could see that. I'm just holding up here to a kickback to about 180 on QQQ. Would be about a 2% rally from where we closed today. I just measured it. Let me get back there again. Yeah, about a 2% rally up to that 180 level, and this would be, at this point in time, and again, my views may change because the markets are dynamic and so are the charts, but I'm looking for if this wedge breaks out, possibly move up here to this resistance zone that runs from about 182.30 to about 182.86, and that would give us, what, that should probably be about 3%. We'll take it from there. If something convinces me otherwise, maybe all the way up here, and that'd be about a 5% rally to about 186. But as of now, let's just assume first things first. If this wedge pops tomorrow, and we start to rally, then let's just say that would be a target. Not sure if it could be hit, if it would be hit by the end of trading Friday. Remember that only gives us one trading session, but 3% gain is doable, especially if there's a lot of short interest right now in the market, and those shorts start to cover. So I got to be quick. It is possible that if that is your plan, like I'm considering, to game a counter trend rally and then get back short again, close longs, it can happen fast. That's the thing about trading stock market corrections. When you trade bull markets, there's an old saying on Wall Street: never confuse genius with a bull market. Buying dips, market goes up, and it's often a slow grind. But when you go into correction mode, stocks tend to fall a lot faster than they rise, and the counter trend rallies, can be very powerful. I think this one was about 10%, but brief. So you got to get in and get out quick. Things happen much faster in correction mode than in slow grind rally mode. So therefore, I do these videos. Have your plan, chart it out in advance, and be ready to react to the market. Or be proactive, in other words, when you hit your price targets or things go where you think they're going. And if all this falls apart, then let me just be very clear, that would be extremely bearish. If these wedges don't play out, the divergences, and the market just dumps and moves on down here to this next target here, that's going to show me, it'll tell me that what's going on here, that we're probably in the very early stages of a much deeper correction. If we can't turn around and break out of those wedges, those nice clean wedges with the divergence and everything else there. And again, watch the SPY. Even if you trade the QQQs or NQs or any of that, you want to watch SPY because you also want to see 280 taken out if the QQQ can pop that wedge tomorrow, or anytime soon. Maybe it goes to next week, who knows, or maybe it doesn't get popped at all again. It's just a, like I always say, a falling wedges or any chart pattern, bullish or bearish, is only a trade setup. It's not a trade until you have a buy signal, unless you're buying. Sometimes you can buy at support within, or the bottom part of the wedge. And so these are your levels to watch on SPY. Pretty much every level you see marked right here. And tomorrow, let's just say we do get a rally, and it's a nice one, 2-3%. 284.26 would be the first significant level where we might get a reaction there on SPY, and that would be from where we closed today. That's about same story, about a 2%. So that's what we could see tomorrow if these things pop. Could carry over to next week if we don't hit those targets by the close tomorrow. But again, plenty of work to be done, so let's not get ahead of ourselves. And small cap, same story. Divergent low right here. That means you have positive divergence, indicators making higher highs and prices making lower lows, and you have a similar wedge type pattern, pretty steep pattern. And you can see some levels, some targets here, and that 152.55-ish target, it's really the top of this gap right here, this big gap. That comes right in with the 38.2% Fibonacci retracement level. There's your 50% fib line there, and that would be another target range anywhere from that 50% fib up to maybe that 154.73, and at most uppermost bounce target if things got really bullish next week, maybe 156.20. But first things first, we got to break out of these patterns, get some buy signals. Otherwise, the downtrend which we're in continues. And we'll just wrap it up here for the futures traders, NQ, E-minis. I have a couple downtrend lines. I have a downtrend line right here coming in. They both come in together, and then we had a couple reaction highs here. So you can see two downtrend lines really in close proximity, but the same story. It's the overhead resistance levels I just showed you on QQQ roughly align with this level here, about 72.86. That was a pretty important support level on NQ. It was broken. If we can regain it, that would be pretty bullish, I believe, because once that broke, that probably ushered in quite a bit of short selling. And if we start moving back above there, especially that downtrend line, you should have a good deal of those shorts start to get squeezed out here. But as of now, the bears are in control. Make no mistake about it. But that's why I do these updates. The markets, things can change on a dime, especially when you start getting these divergences and these downtrend lines that are pretty well defined at that point, and other levels like that. So I'll watch this one overnight, and if you watch futures, that's what you want to watch, is a pop over both those trend lines, and we'll call it maybe that 72, say around 72.90. I think if you pop 72.90 in the overnight session, or before the market opens tomorrow, then you'll probably get that gap up well, actually any rise, any lift in the futures now would take the Qs, because we closed right on that downtrend line. So it doesn't take much to pop them out, but that would be that would open the door for a move up here. And I'll give you one other level to watch right about here. Yeah, we have quite a few reactions there. Reactions from above, reactions from below. So there's their near-term target on NQ. And I like this level right here too. Right about there. Where'd my line go? There we go. Right about 71. So we'll call 74. We'll call it 74.80. So let's just say that'd be yeah, there it is. Also comes in right around 3%. So there's my bounce target range if this thing breaks out tomorrow or early next week from where we're at now, and that could change if we go a little lower, but we're talking about a 2 to 3% rally at this point. And possible if we do break out, there could be more, but let's just we'll take it from there. We'll see how things look tomorrow. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.